Good morning, I'm Maiki Oreta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Government debt barrels toward a record 19 trillion pesos by 2026, stirring fresh concerns over the nation's fiscal health. Illegal e-sabong still alive and kicking. A new study exposes how the banned betting game is hiding online. U.S. President Donald Trump pushes to extend federal control of Washington, D.C. police, sparking criticism over federal overreach and a clash with local Democrats. All that and more coming up. Let's take a look at how global markets performed overnight. Wall Street extended its winning streak to 2 days as hopes grow that the Federal Reserve is close to starting a rate cut cycle. Treasury Secretary Scott Bessent even floated a possible half-point cut, pointing to weak jobs data.
Investors are no doubt watching inflation that is, although a little cooler than expected, still stubbornly above the Fed's metric, a impugning of the independence of the Federal Reserve from the executive branch that seems to have been joined by the legislative branch now, a plethora of names being mentioned for Jerome Powell's new job and the opening seat on the Federal Reserve Board, all of which are leading to politically driven policy as opposed to sound monetary policy. That on top of President Trump going to Alaska to try to negotiate at the end of a war that we're not involved in, including some outcomes that seem unpalatable to just about everyone other than Presidents Putin and Trump. All of that comes together of there's a lot to be worried about, but it doesn't seem to much matter.
The Dow Jones Industrial Average jumped 1%, the S&P 500 higher by 0.3%, and the Nasdaq up by 0.1%. Over in Europe, London's FTSE gained 0.2%, Germany's DAX higher by 0.7%, and France's CAC 40 higher by 0.7% as well. Now, stronger global equities signal improving risk appetite, a trend that could help lift investor confidence, even in emerging markets like the Philippines. Here at home, the government's fiscal position remains under pressure. The government's debt is projected to top 19 trillion pesos by the end of 2026. Budget of expenditures and sources of financing for fiscal year 2026 data shows it will rise 8.15% to 17.36 trillion this year, then climb another 9.77, nearly 10% to 19.06 trillion pesos next year. Budget Secretary Amena Pangandaman says interest payments are swelling as the country continues to pay down the borrowings it took on during the pandemic. The rising debt load will shape government spending priorities with implications for tax policy, infrastructure funding, and the overall cost of doing business in our country. And that mountain of public debt also has a personal price tag. Each Filipino now owes around 157,000 pesos of their share of the government's 17 trillion national debt. In an interview with Bilyonaryo's news channels Follow the Money, Diwa Gunigundo, former deputy governor of the Bangko Sentral ng Pilipinas, said that the country spends about 2 trillion pesos a year on interest and principal payments alone.
Interest alone, that's about nearly 3% of GDP, or about 30% of our national budget. Now, instead of channeling this amount to public education, public health, and critical social infrastructure, we had to use it instead for debt servicing, for payment of our debt. So we end up with less classrooms and educational facilities, less hospitals and medicine, and less social infrastructure project. It's the quality of life of Filipinos that is affected in the process.
Gunigundo noted that debt is not inherently bad, as business expansion and economic growth often rely on borrowing.
Either from the loan market, when the private sector, the government borrows from a bank or a financial institution, or they can choose to float bonds from the either the domestic or the foreign capital markets. Now, this is an intertemporal funding. You fund business expansion now to increase the capacity of the company and the country itself to earn in the future, from which the debt servicing requirements could be sourced. Yes, I think what is more critical is how we use and manage loan proceeds.
But he warned against depending too heavily on it, saying fiscal stability is at risk if the government fails to manage its obligations wisely.
Higher taxes, again, could be a big imposition on the taxpayers. And higher taxes could also be contractionary in terms of economic growth. Let us avoid bad governance.
With interest payments eating up a growing share of the budget, the pressure is on for the Philippines to boost revenues and sustain growth or risk crowding out spending for infrastructure, social services, and other engines of economic competitiveness. Now, the House of Representatives is set to overhaul the national budget process. Speaker Martin Romualdez says the goal is more about transparency, inclusivity, and accountability. Key changes include scrapping the small committee that handled post-approval amendments, opening House Senate budget meetings to the public and media, and inviting civil society, people's organizations, and the private sector to join the budget hearing. On Wednesday, the chamber received the 6.79 trillion peso 2026 National Expenditure Program from the Department of Budget and Management. Lawmakers say that the reforms aim to boost public trust and cut through the opacity that has long clouded the spending process, a crucial step in a year when the budget will help define economic growth and investor confidence. And across the hall, the Senate is making its own move to open up the budget process. Lawmakers have adopted a concurrent resolution that will post key documents and a matrix of all changes online. Senator Ping Lacson wants full disclosure of lawmakers' written amendments and their proponents, warning that fund insertions can't be traced without it. Finance Committee Chair Sherwin Gatchalian says that the public will still see changes per program and office, but admits original proponents may be harder to identify as amendments evolve. Under the new system, any fund increase must be matched by cuts elsewhere, and a website feedback tab will let the public comment or criticize. The Senate says the reform is a step toward greater accountability and public trust, setting a precedent for a more open budget process at a time when every peso is coming under scrutiny. Stick to the spending plan. That's the warning from the Department of Budget and Management to lawmakers after this year's budget was branded the most corrupt over alleged pork barrel insertions. Budget Secretary Amena Pangandaman says there should be no room for realignments in next year's record 6.79 trillion peso proposed national budget. Still, she says she respects the constitutional power of Congress to amend the plan. The remarks come as both the executive and legislative branches face pressure to prove that the 2026 spending plan is free from pork and fully transparent, with the Senate pushing for online disclosure of all budget changes to restore the public's trust. On another front, Vietnam is urging the Philippines to rethink its plan to suspend rice imports for 2 months, warning it could rattle regional trade and impact both country's farmers. The import halt set for September 1st is meant to protect local producers after prices slumped during harvest. The Philippines is Vietnam's top rice customer, buying 2.4 million metric tons this year, 44% of Vietnam's total exports. With Philippine output surging 13.9% in the second quarter, Manila says the move is well-timed to give local farmers a fair shot, even if it risks straining one of ASEAN's most crucial food supply links. The decision could reverberate beyond farm gates, affecting regional food security, inflation, and trade balance at a time when global grain markets are already under pressure. Now, the United States Department of Agriculture cuts its rice import forecast for the Philippines by 500,000 metric tons, following President Marcos's 2-month import ban starting September. The ban is designed to protect local farmers from falling palay prices But even with the reduction, the Philippines is still expected to be the world's biggest rice importer at 4.9 million metric tons this year. Farm groups say that the original target was already too high, and they're pushing to restore higher rice tariffs. The USDA also projects our milled rice output to top 12 million metric tons over the next 2 marketing years, a trend that could help stabilize supply, ease pressure on inflation, and support household spending power. With rice as a staple for Filipinos, price stability will remain crucial, not just for family budgets, but for the overall health of the economy as well. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Thursday morning. Right now, the Nikkei 225 is sharply lower, down by 1.4% in early trade. Hong Kong's Hang Seng Index going the other way, up by 0.3%. Shanghai's Composite up by 0.4%. And Singapore Straits Times Index lower by 0.5%. Here at home, optimism from U.S. markets spilled over Wednesday, lifting the PSEI above 6,300 for the first time this week. The benchmark index rose 0.6% to 63.25, fueled by steady U.S. inflation at 2.7% in July, boosting hopes for a Fed rate cut, which the BSP may mirror. Analysts say near-term sentiment will be driven by corporate earnings and Fed signals. The PSEI faces resistance between 63.50 and 6400, while support holds near 62.50. Now, taking a look at our market this morning as of 10:16. The main gauge is in the green, up by 0.5% to 63.55. Looks like we may stay in the green as market breadth is very positive right now, with 80 advancers, 43 decliners, and 36 stocks unchanged. All shares indexed up as well, up by 0.3%. The financials, industrial, holding firms, and property counters are lifting the market, whereas the services and mining and oil counters are keeping the gains in check. Now, total volume is at 159 million shares, valued at just over 1 billion pesos. Again, market breadth is positive, with 80 advancers, 43 decliners, and 36 stocks unchanged. Taking a look at our currency market, the peso opened slightly stronger at 56.70 to the dollar from its previous close of 56.72. Taiwan is eyeing stronger trade ties with the Philippines, setting a target of $7 billion a year as it seeks new growth markets amid global economic uncertainty. Focus areas include information and communications technology and green technology, sectors both countries see as key to driving innovation, jobs, and a more resilient partnership in the region. Sujin Kim has the details.
We hope to take Taiwan-Philippine economic ties to the next level and foster a more sustainable and forward-looking future together.
Taiwan is aiming to raise its current bilateral trade with the Philippines, now at over $5 billion back to the pre-pandemic average of $7 billion. Visiting officials see significant potential in the Philippines as an emerging market in Southeast Asia, with a population of over 100 million.
This is the market we cannot ignore and forget. Especially this year, we are facing so many situations like trade war, geopolitics, and American bilateral custom duty. So we need to explore more and more markets which are full of potential, like Philippines.
In recent years, we have seen the Philippine government actively promoting strategic industries such as telecommunication infrastructure, green energy, agro-processing, and industrial zones. These efforts align perfectly with Taiwan's strengths in sectors like ICT, green technology, and smart manufacturing. We look forward to work closely with the Philippines to share our expertise
While the United States remains Taiwan's largest export market, Taiwan is expanding its engagement with other countries, including plans to deepen agri-tech and aquatech cooperation to help strengthen the Philippines' food security.
Most important, we're facing the problem like weather change, global warming, especially we have same issue of the cyclone, typhoon.
From the business community's perspective, PCCI Trade Vice President Brian Ang says tourism should also be a priority, noting that Taiwanese tourist arrivals in the country remain less than half the number of Filipino travelers to Taiwan. Sujin Kim, Bilyonaryo News Channel.
It's a tale of two markets. Local bonds are soaring while equities stall in Q1. Peso bond volume surged 4.1% to 13.5 trillion pesos, the fastest growth in emerging East Asia on front-loaded government borrowing and a rebound in issuance. But the PSEI is still nearly 30% below its 2018 peak, signaling weak capital formation and investor confidence. And that matters because market momentum shapes borrowing costs, the peso, and the financing landscape for business. Meanwhile, government borrowing is set to hit new highs with outstanding debt projected at 19 trillion next year and a big chunk going to infrastructure, including politically charged flood control projects. That raises questions about debt sustainability, project quality, and whether private sector involvement can deliver better results. So what's Cignal, what's noise, and how should businesses and investors position ahead of 2026? Joining us now is Sandra Araulio, Chief Investment Officer at Atram, one of the country's leading asset and wealth management firms. Hi, Sandra. Thank you for being here with us.
Hi, good morning. Thanks for having me.
Okay, Sandra, you see it all. Let's talk about the investment climate. You see bonds, equities, currencies, alternatives. Apart from being very divergent, how would you describe the current investment climate in the country today?
Well, yes, as you mentioned, no, there has been front loading of borrowing met by demand. So that's a good sign. There's a lot of liquidity in the market, and it has helped to push fixed income performance. Meanwhile, on the equity side, it's been looking for momentum despite some pockets of performance in REITs, for example, and some consumer plays. So it's been a selective market, I would say. And again, it's still looking for that catalyst, I suppose, that will push it to higher levels.
Speaking of that catalyst, what's the single biggest swing factor over the next 12 months?
So we really think that rate cuts by the BSP will be that big boost that the market or the equity market can benefit from. Both markets, actually. I forgot to mention a point where bond markets and equity markets, the relationship between the two, we're actually seeing it a little bit more normal with fixed income performing.
Yeah,
and
we're seeing the norm.
It's more normal, actually. But
there are different drivers for both markets. Talk to us about that.
Well, when the policy rates are being cut as we expect it to continue, the BSP has cut twice this year already, and maybe another two cuts for the balance of the year, that lowers borrowing costs, and that can be a signal for capital to flow into other markets. So it's when rates move lower, when interest rates move lower, prices of bonds move higher. So the market has been pricing in an expectation for interest rates to move lower. So that's been showing in the performance of the bond market. On the equity side, it's tied to economic growth mostly. So, or at least that's the driver, the fundamental driver. So why would the central bank cut? It's because it needs to ease policy to stimulate more growth. And so for companies, it will reflect in maybe earnings growth. So that's also what's being priced in. But if the market or investors anticipate that there will be an easier monetary environment, then it can stimulate activity for corporates and, of course, those that have good prospects will invite these capitals
Yeah.
and prices move higher.
Speaking of expectations, the Fed cut expectations. Expectations are for a 50 to 75
Yes,
cut by the
yes.
U.S. Federal Reserve. How do you see that affecting us?
Should be good because part of what the BSP needs to look at as well is the FX or peso stability. So in fact, the first two cuts that have taken place at the beginning of the year, divergent, or it moved in the opposite direction of what the Fed was doing. It put at risk the peso. So the peso was a bit, or they have to manage the risk of the peso weakening too much because of the interest rate differential.
Basically, as interest rates are headed lower, we're already in a dovish interest rate environment. It's expected to get even more dovish with
Yes.
perhaps 50 bips cut by the end of the year. Now seems to be like a great time to buy bonds.
It is definitely, especially longer dated bonds, longer tenured bonds, the 10 to 20 year. The Treasury has just issued a jumbo RTB, and longer tenors are expected to come to the front, and I would lock in those high interest rates. Keep a little bit of for opportunistic refinancing rates. I mean, there will always be something that might push markets a bit higher, but we don't think it's going to be. I mean, yields might go a little higher, but we don't expect that to be the general trajectory. So it's really good to lock in those high yields today and kind of have a smoother investment journey for in that space, compared to equities.
Taking a look at the flip side, let's talk about equities. The PSEI hasn't broken out in over a decade, still nearly 30% below its January 2018 peak of 90.41. Internally and externally, Sandra, what's been holding our market back?
So externally, a lot of uncertainty. I mean, we tend to forget, all of the tariff talk, President Trump getting reelected, you have regional conflict, and in the eyes, in the global stage, we are an emerging market, and a lot of the
Risk appetite.
Yes,
shifting.
so it has to. Investors want to be
Earnings
compensated more
predictability,
for the risk that they will take in an emerging market, and so the capital or foreign flows have been, instead of going into our market, it's been moving out. So supply demand tends to come into play there, and I think internally there has been a sentiment is not good as well. No IPO activity, no excitement at all.
It's been nil IPO activity on that. No action on that front.
No action.
What's it going to take to get companies to want to list? I mean, this environment is just not that conducive for that sort of action. What are your thoughts on this?
Well,
Sandra?
we do want to see tighter governance or rules around listing. I think there are reforms that are underway. It just needs to come sooner or quicker to restore investor confidence. There has also been, I guess, or there needs to be an acknowledgement that the index itself is quite concentrated, and we have to evolve in encouraging IPOs, especially for maybe it's very brick and mortar, its current composition, so maybe a little bit more of your technology or fintech type of companies. We have been eyeing GCash IPO. Hopefully that kind of pushes through. So we really need something to wake up that space.
Yeah, absolutely. In the meantime, how are things looking on the ground? Given the PSEI's underperformance, what are your clients currently doing? Shifting more weight offshore to other alternatives? Which markets and what alternatives are they looking at?
Definitely, there's been a bias towards global markets. Those places where earnings visibility is more transparent. It's also attractive to our clients. One thing we've noticed is a lot of appetite has gone to multi-asset strategies, no? So it's, I guess, going back to the basics.
Diversification.
Diversification. So it's been paying off, and our clients are feeling that. Also, there is a direction towards resilient themes such as AI. I mean, it's like really the traction is, it's not hype anymore. I mean, it was hype in, what is it, beginning of 2024, right? In January, if you recall, there was a lot of hype around AI.
It's being really embedded into everything we do.
It's gotten a lot of traction, and we're not just seeing it in the tech segment. I mean, it's encompassing, no? So a lot of different sectors can be positioned to take advantage of this modern industrial revolution, if you want to put it that way.
Okay, let's shift to foreign exchange and global risk. The peso's been steady but still sensitive to U.S. rate policy. What's your base case into the year end, and how should importers and exporters hedge without overspending?
So with the Fed likely to trigger a cut by September, that should maybe drive the peso, or the base case is for a little bit more strength in the peso. That means that it would be beneficial for our exporters. Importers will stand to benefit by hedging a little bit of that risk that they're seeing. But on balance, the BSP is also expected to match any Fed cut. So that should keep the FX quite stable.
So where are you looking at the peso finishing the year?
At this point, I think the house view is at 56.5 for the rest of the by the end of the year.
56.5. Okay, and what about for the equities market?
For the equities market, so we've had a target of 7.1 by year end. But as earnings season has been shaping, there has been some disappointment in terms of results. So we're looking at any earnings revisions that might take place, and also how it's going to take shape for
your year-end targets.
That will affect our year-end targets.
Okay, all right. Now, on another front, if the U.S. imposes a 100% tariff on chips, what's the immediate hit to our electronics exports, and how could that ripple through our local markets?
Well, of course, it will hit it hard. We'll be hit hard.
At a 100%? Hard hit or dead in the water?
Definitely hard hit. The good news is there aren't a lot of listed companies or publicly listed companies that will kind of immediately reflect that headwind. But there are companies that do a lot of our semiconductor exporters are going to feel this last couple of years. So this 100% tariff will definitely not be
good. Shift. Let's talk about debt. Let's talk about debt. Is set a record 19 trillion pesos in 2026. Payments alone nearing 1 trillion pesos. A big chunk of that is supposed to go to infrastructure, including politically sensitive flood control projects. From both an investment perspective and as a taxpayer, how concerned are you about our debt sustainability?
Should be concerned. I mean, it is concerning. Debt has remained elevated, but it's not unmanageable. It's still manageable. You have inflation easing and borrowing costs stabilizing. So that is some light at the end of the tunnel, so to speak. Right? But as with anything, debt it needs to go into productive use.
Yes, it has to come hand in hand with productivity.
Yes, and good news is it's going into infrastructure spending. That needs to be met with good governance, transparency, so that investors investor confidence will, will get better. So us as taxpayers, don't mind funding, paying for these things if we do see the benefit for down the road.
If we look at it, it's like getting debt to buy a cell phone.
Yes.
Okay?
So
you're going to take on that debt to buy that cell phone to boost your productivity. That's the game plan there, not just to take on debt to buy a new cell phone.
Correct.
Okay. At what point, however, looking at 19 trillion pesos in 2026, at what point could this hurt investor confidence, Philippine bonds, the peso, and our investment grade rating?
Yeah, so it's about fiscal discipline. It's about credible execution. And if those things are absent, the credit rating will be at risk. Again, going back to the analogy of borrowing money to buy a phone. I mean, if you're going to use it to run a business, for example, maybe. But if you're just buying a phone to get the latest model and not really
so
boost
infra
your
spend
productivity.
should really equate to higher productivity. Taking a look at it, if infrastructure spending adds debt without boosting productivity, can you explain how, in our case, how that's going to undermine our growth story and our macroeconomic fundamentals?
It's not going to be inclusive growth, and that's what we need. So the Philippines, the population, the young population, the what do you call this? The demographic dividend, no? There's a lot of value that needs to be unlocked, and that's where we have to put our efforts in, and that's where infrastructure spending comes in.
Yeah. Speaking of all that spending and sovereign debt, with 77% of next year's sovereign borrowings coming from the domestic market, could this heavy issuance drain liquidity for private borrowers and push peso yields higher in the medium term?
Unlikely, because as we've seen, the issuances early this year has been met with a lot of demand. The RTB, Retail Treasury Bond as well, this third quarter has been met with a lot of demand. So unlikely that more borrowing can push yields higher in the future unless investors see that it's not credible borrowing. It's not going into that intended use.
Okay, going on some practical tips. For business owners, CFOs, what's one piece of advice on liquidity, debt tenor, or CapEx planning that you can give for next year?
So I would say maintain liquidity buffers for one. We favor medium-term debt, not lock it in so much, and maybe prioritize scalable, ESG-aligned CapEx. Because, I mean, at the end of the day, it's about sustainability, no?
Yeah.
And I think the Achilles heel of the Philippines has been its boom-bust, boom-bust. The economy itself has been boom-bust. We don't want to, our CFOs can do well to not ride that very volatile macroeconomic cycle. So planning carefully in terms of a smoother experience for companies.
Okay,
and
moving
sustainability.
on. Retail investors need to plan carefully too. With the BSP hinting at 2 more rate cuts this year, what's one simple portfolio move or in this dovish interest rate environment as it gets even more dovish?
Simple advice, move 20% of your portfolio to long duration or long tenured bond funds. Okay. And as well, diversification is always sound advice. Global multi-asset feeders will do that for investors, so it's very low maintenance and high resilience.
Okay. One more thing. I want to ask you about PPPs because investor confidence isn't just about yields and GDP. It's also about governance. Corruption in infrastructure, from roads to flood control, has long hurt our competitiveness. Do you think PPPs are the solution to this?
I think it's conditional, no? You need to see faster and cleaner infrastructure, and it's the private institutions that have the capability to deliver on those. What's important is transparent bidding, strong oversight, and with that, PPPs can certainly accelerate delivery on what we need and also restore investor confidence.
Yeah, we've done it with expressways. There's talk about doing it for flood control. Do you think that this is the model of the future, perhaps, for the Philippines? If not the government, then who else? The private sector.
Exactly. And it's not just limited to roads and flood control, although it's very, very important. But the way of the future is really digital infrastructure, healthcare, renewable energy. So these are, if we get the execution right on PPPs with this flood control, it creates a template for
message about where the Philippines is headed over the next 2 years. What would that message be?
So like for the last 3 years, I've question, and it's always just stay put. The future looks bright. It's not easy to it's easy to write the Philippine markets off, Philippine equity markets off. But I do think that the closer we're at capitulation. A lot of investors have capitulated already, actually. But rather than joining that fray, I think we are at a crossroads. Definitely, we should mind or pay attention to resilient fundamentals. It's still there. You have a maturing bond market, and definitely untapped potential in the equity space and even ESG. No, so with the right reforms, it's really the reforms that need to come in to boost investor confidence. Of course, you're gonna have like maybe an IPO, maybe a catalyst here and there, but the underlying need for reforms is still what we want to see. And then that all of that potential can be unleashed.
We will hang on to that hope for all that untapped potential, as you said. Thank you so much, Sandra, for your time.
Thank you, Maiki. I had a good time.
All right, that was Sandra Araulio, the Chief Investment Officer of Atron. We're going to be taking a short break. Business 360 will be right back. Fuel player Phoenix Petroleum is asking for more time to get its books in order. In a letter to the Philippine Stock Exchange, Bilyonaryo Dennis Ui's firm said it will file its 2023 and 2024 audited financial statements by October 31st. The delay is due to its new auditor still finalizing the 2023 report and wrapping up fieldwork for 2024. Phoenix is also finishing a liability management exercise to restructure debt and free up funds for recovery. The company expects the move to draw new investors and secure fresh capital to strengthen its balance sheet. If successful, the restructuring could help Phoenix regain ground in the competitive fuel market and signal a turnaround for one of the country's biggest independent oil players. Now, a showdown is brewing over a controversial internet access bill, and the clock is ticking. Telcos warn it will cripple competition, open the door to cybersecurity breaches, and give the government unprecedented control over how Filipinos connect. With just days before it automatically becomes law, PLDT says it's prepared to fight it, even if that means taking the battle to court. Sujin Kim reports.
PLDT is prepared to take the matter to court if President Marcos signs the Konektadong Pinoy Bill into law. PLDT Smart, along with Converge, earlier wrote to Malacanang urging a veto of the measure.
We're hoping that it will not be signed by the President into law, but if it is signed into law, then we have our option to go to court to raise the issues of constitutionality.
PLDT says one of the key issues is the bill's alleged violation of the one subject, one bill rule.
From a technical legal point of view, a bill can only cover one subject so that everything is discussed in full. There's no sidetrack, there's no basically attempt to write into a legislation.
Second is its alleged favoritism.
The data transmission providers are being given so much benefits which are not being given to the telcos also. So in a sense, there is a discrimination against the telcos.
Another point of contention is the broad open access mandate.
They're requiring us to open our assets, all our assets, to data transmission providers without the condition that it must be essential. Here, it is like they don't have to build infrastructure because they can just access our assets. That's not how open access works. So it's like a right of way.
PLDT warns that allowing new providers to operate without security clearance for the first 2 years under the bill could expose the network and subscribers to heightened cybersecurity risks. Despite these concerns, PLDT Chairman and CEO Manuel Pangilinan says,
"We continue to provide the service regardless of conditions in this country."
The bill has just 7 business days left before it lapses into law on August 24, automatically taking effect if not signed or vetoed by the President. Sujin Kim, Bilyonaryo News Channel.
Veteran election lawyer Romulo Macalintal says Senate President Cheese Escudero may have committed an election offense. This comes after Escudero confirmed that he received campaign funds from Lawrence Lubiano of Centerways Construction, a government contractor involved in flood control project.
So sir, kino-confirm nyo na nag-donate siya ng 30 million?
Yes, nasa records yun. Ang lumabas na artikulo, kinikilala ko, kaibigan ko, kababayan ko, tiga Sorsogon, contractor siya. Pero ang nakuha niya ay 5.4 billion di umano.
Attorney Macalintal cites Section 95 of the Omnibus Election Code, which bans candidates from accepting donations from government contractors, even if they have no pending contracts during the election period.
Hindi pwedeng magbigay ng contribution yung sinumang tao, maging yan ay mga korporasyon o talaga yung natural persons sa sinumang kandidato kung yung mga kumpanyang yan ay merong kontrata sa gobyerno, anumang kontrata na nagbibigay ng mga services o kaya nagsusupply ng mga goods, yung mga supply, government supplies, yan ay bawal yan. Hindi po pwedeng magbigay ng ganyang uri ng contribution. Kahit na tumigil siya kung halimbawa sa ito, pero dati naman siya nagsusupply sa gobyerno, ay yan ay papasok pa rin dahil siya ay isa ng supplier o isa siya sa mga duly accredited na supplier ng ating pamahalaan.
The controversy comes as lawmakers face growing public scrutiny over campaign funding and its impact on policymaking. A reminder that transparency and accountability remain central to maintaining business confidence and political stability. A House Deputy Speaker agrees with Senator Ping Lacson that some 67 congressmen were allegedly contractors of their own government-funded infrastructure projects. On Bilyonaryo News Channel's On Point, Antipolo 1st District Representative Ronaldo Puno said the issue is a serious cause for concern.
That criminal investigation is underway also with respect to all of these incidents, no? And I think that if there is wrongdoing there, the criminal justice system must take its course. It bothers us that that is the number of people of that sort, no, that are in Congress. Not that there's anything intrinsically wrong in being contractor, but you're correct in that there appears to be a kind of conflict of interest, and especially if they do contracts for their own districts, no? Because if they do that, that is clearly a criminal act.
The allegations strike at the heart of good governance, raising questions on conflict of interest, public trust, and how infrastructure funds are awarded and spent. Illegal online cockfighting, or e-sabong, continues to thrive on unregulated gambling platforms despite a nationwide ban. A new study by social cultural research firm The Fourth Wall found e-sabong events still being promoted through Facebook groups and private messages. Researchers warn that these unregulated sites operate outside PAGCOR's jurisdiction, leaving players vulnerable to scam, heavy losses, and underage gambling. President Marcos suspended the activity in December 2022 under Executive Order Number 9. The findings highlight the challenge of enforcing online gambling laws and the growing need for stronger digital regulation to protect consumers. Elsewhere in the world, U.S. President Donald Trump wants to extend federal control over Washington's police force beyond the current 30-day limit. He's asking Republican lawmakers to pass a crime bill that would allow it, and says declaring a national emergency is also on the table. The move has drawn criticism as unnecessary and an overreach of federal power.
You're going to see a big change in Washington crime stats very soon. Or not the stats that they gave, because they turned out to be a total fraud. The real stats, the stats went through the roof. You know, they had a man that was forced to put up stats like they were doing better. They're not doing better. Crime is the worst it's ever been. But it started as of about yesterday. It started to, you see a big change. And people are feeling.
The debate highlights the delicate balance between public safety and local autonomy, a flashpoint that could shape law enforcement policy well beyond the U.S. Capitol. Still in the U.S., on Wall Street, cryptocurrency exchange operator Bullish soars on its New York Stock Exchange debut, more than doubling its value and lifting its market cap above $13 billion U.S. dollars. Bullish is nearing the end of a 2-year bid for a New York bit license, a key regulatory approval that would let it serve customers in the state. Meanwhile, the parent company of crypto news site CoinDesk raised $1.11 billion in its IPO, valuing it at $5.4 billion. Industry watchers say the successful listing could pave the way for more digital asset firms to tap U.S. capital markets, potentially reshaping the global crypto landscape and investor access. Over in South America, Brazil is rolling out a multi-billion-dollar aid package to help companies hit by U.S. President Donald Trump's tariff hikes. The plan includes a $5.55 billion credit line for exporters and government purchases of goods that can't find new markets. Trump raised duties on several Brazilian products from 10% to 50% earlier this month. While some sectors were spared, major exports like coffee, beef, and textiles are expected to take a hit. President Luiz Ignacio Lula da Silva says Brazil will not retaliate for now, focusing first on protecting industries and jobs.
We will continue to insist on negotiation because we like to negotiate. We are not announcing reciprocity measures. Look at how cooperative negotiators we are. So we don't want, at first, to do anything that would justify worsening our relationship.
Economists warn that the tariffs could slow Brazil's export growth and add to uncertainty in global trade at a time when supply chains are already still fragile. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.